Most people hear the word stock market and immediately feel a little tense, like this sounds complicated, right? And honestly, if that's you, you're not alone at all. Because for decades, the stock market has been presented like this exclusive secret club. Rich people in suits shouting at screens, charts flying everywhere, numbers flashing red and green, and somehow money just magically appearing. And when you're sitting at home watching that, maybe after a long day at work, bills to pay, responsibilities piling up, kids to feed, deadlines to hit, emails still unanswered, you naturally think, yeah, this clearly isn't for people like me. It feels distant, intimidating, almost designed to make you feel small. But here's the truth, and this is really important. The stock market is actually one of the simplest ideas humans have ever created. It's not complicated by nature, it's complicated by the way it's explained, often on purpose. Complexity makes people feel dependent. Confusion keeps people out. And the longer you stay out, the longer your money sits still instead of working for you. So today, I want you to mentally throw away everything you think you know. Unclench your jaw, relax your shoulders a bit, take a breath, maybe even exhale slowly, and just treat this like a normal conversation you'd have with a friend over coffee. No pressure, no tests, no judgment. Because by the end of this video, you'll genuinely understand what the stock market is, how it works, and why literally anyone, yes, even you, even if you think you're bad with money, even if school never taught you this, even if you've made mistakes before, can understand it. And before we go deep, quick intro because I know some of you are new here. I'm Ian, and this channel exists for one simple reason: helping normal people understand money, investing, and how not to stay broke. No hype, no Lambos, no buy this now nonsense, no pretending this is easy, just real explanations for real people living real lives. All right, let's get into it. So imagine this. Let's say your friend opens a small coffee shop down the street. It's doing okay. People like the coffee. There's a steady morning rush, regular customers, maybe even a line on weekends. Nothing flashy, just honest business. But now your friend wants to open a second shop, maybe even a third one. The problem? Money. Rent costs money. Espresso machines cost money. Staff costs money. And savings only go so far. So what does your friend do? They could go to a bank and take a loan, sure, but loans come with interest, pressure, and the constant stress of monthly repayments, even when business is slow. Miss a payment, and suddenly things get ugly. Another option is to say, hey, instead of borrowing, I'll sell small pieces of my business to people. If you give me money today, you own a small part of this coffee shop. If the business grows, you grow with it. And that's it. That right there is the stock market in its purest form. No screens, no shouting, no mystery. A stock is simply a tiny piece of ownership in a company. When you buy a stock, you are not gambling. You're not guessing. You're not pulling a lever like a slot machine. You are literally becoming a partial owner of a real business that sells real products, provides real services, and employs real people. That's why this matters so much, and why this mindset shift is critical. Now zoom out. Instead of one coffee shop, imagine massive companies like Apple, Google, Amazon, or Tesla. They do the exact same thing, just on a much larger scale. They split ownership into millions or even billions of tiny pieces called shares, and those shares are bought and sold on something called a stock exchange. Think of the stock exchange like a giant marketplace, just like a farmer's market, except instead of buying tomatoes, bread, or fruit, people are buying and selling ownership in companies. And this is where confusion creeps in. People think stock prices move because of luck, insider tricks, or some secret algorithm running the world behind the scenes. But no, prices move because of basic supply and demand, the same force that decides the price of petrol, houses, or even concert tickets. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. That's it. No magic, no mystery. Now let's talk about why companies even do this in the first place. Companies go to the stock market to raise money so they can grow, open new stores, hire more people, build better products, invest in technology, expand into new countries. When you invest, what you're really saying is, I believe this company will be more valuable in the future than it is today. And if that belief turns out to be right, your small piece becomes more valuable too. That's investing. But here's an important pause moment. This is where people mess up badly. They hear stories of someone turning $1,000 into $100,000 overnight and think the stock market is a get-rich-quick machine. It's not. Those stories are rare, cherry-picked, and often missing the failures behind them. The stock market rewards patience, consistency, and understanding. It punishes impatience, hype, shortcuts, and emotional decisions. Let's make this very real. Imagine you buy a stock for $100. You don't stare at it every day. You don't panic over headlines. You live your life. A year later, the company grows, sells more products, makes more profit, and people believe in it more. That stock might now be worth $120. You didn't trade, predict, or time anything. You just owned a piece of a growing business. That $20 difference is called a capital gain. Some companies also pay dividends, which is basically cash they share with you just for being an owner. Think of dividends like getting paid rent, except instead of property, it's coming from businesses you partially own. Even small dividend payments, reinvested over time, can quietly snowball into something powerful. Now, quick reality check. Stocks don't always go up. Some days the market is red. Some years are ugly. And this is where beginners panic. They open the app, see negative numbers, and think, oh no, I've lost everything. But here's the mindset shift. A falling price doesn't automatically mean the business is bad. Sometimes the entire market is scared. Sometimes there's bad news. Sometimes it's just noise. Long-term investors see drops as discounts, not disasters. Traders, on the other hand, try to make money from those ups and downs. And yes, investing and trading are different. Investing is like planting a tree and letting it grow over years. Trading is like surfing waves, faster, riskier, more active. Neither is wrong, but beginners should understand investing first before touching trading. In future videos, we'll cover how to buy your first stock, what brokers actually do, what indices like the S&P 500 mean, why diversification matters, and why most people lose money not because the market is rigged, but because they act emotionally. Fear and greed. Those two emotions have wiped out more portfolios than any crash ever could. You see a stock flying up, you feel fear of missing out. You buy at the top, it drops, you panic, you sell at the bottom. That's not investing, that's emotional reacting. Smart investors think like business owners, not gamblers. They ask, do I understand this company? Does it make money? Will it still exist in 10 years? Not, what will this do tomorrow? And here's the comforting part. You don't need to be rich, smart, or good at maths to invest. You just need patience, clarity, and consistency. Even small amounts invested regularly can grow into something meaningful over time because of compounding. Money making money on money. It's slow at first, almost boring, then suddenly powerful, like a snowball rolling downhill. So let's zoom out and summarize. The stock market is a place where people buy and sell ownership in companies. A stock is a piece of a real business. Prices move because of supply and demand. Companies use the market to grow. Investors make money through growth and dividends. Investing is long-term ownership. Trading is short-term movement. And success comes from understanding, patience, and emotional control, not hype. No mystery, no secret society. And if this video made the stock market feel clearer instead of scarier, you're exactly where you need to be. This is just the beginning of the series, and we'll build this step by step so you actually understand what you're doing instead of blindly copying others. If you stay till the end, I appreciate you. I'm Ian. Don't be broke. See ya.